One second, the channel for learning about trading and investing. Welcome to Quick Market Analysis, where we look at what happened in the market during the day and then try to learn something from it and plan for a better trade for the next day. And this is the analysis for March 31st, Friday, 2023. Tomorrow is a trading holiday. So let's get the charts. Here we have the Nifty 50 charts that you're seeing a wide range bullish candle. Finally, after several days, look at this. It's almost 8 to 9 to 10 days high, probably a little short of 8 days high. So it's a beautiful breakout, bounce from the support zone is what you're seeing, right? And Banknifty was much more stable than the Nifty in previous several days, and then that also has given a wide range, clear bullish candle that is about 200 EMA. Let's get into details and what's in favor of the bulls. What are things? Wide range bullish candle we have seen. Closed above the 17K Nifty, 0.73 in Nifty and 0.75% in the Banknifty up. Momentum has picked up on both. In fact, the momentum of Nifty was in the bearish zone, now it is in the sideways zone. And both the momentum is rising up. There is a bullish divergence that we talked about in the Nifty that worked out, and that's pushed the momentum into the sideways. There was a range shift on the Banknifty, momentum range shift concept we talked about yesterday, and that seemed to have worked out, and that pushed the Banknifty to close about the 200 EMA. Market is on the weekly charts. If you see, you can clearly see that we are still in a higher high, higher low pattern on the medium term weekly charts. But in the shorter term, we are in the lower low, lower high. But that gives hopes that 16,750, unless it's breached, we are still in a higher high, higher low. So indices are very close by a very major support zone. We know that 17,750. It's a confluence of multiple moving average, previous swing lows, gap, and all this is coming in the 650, 750 zone, 16 also. So it's done a very substantial good correction also. 12.5% in Banknifty, 11% in Nifty nearby. So I'm very close to support from the bulls to try to defend it. So that's positive again. All demands are on the downside expansion, but we can see that today it has slightly taken a pause and then started at the beginning of the consolidation of the sideways movement. I don't know whether it will work out or not. It may take some more time for the bull demands to confirm the sideways zones on both upper and lower. But as of now, it has started that in both indices, which is positive. It's more evident on the Bollinger Bands of the Banknifty on the daily. And the crude is still another factor. I'm just listing all the points that's in favor. It's still 74 kind of level, so it should be okay. And really across the section, if you see that sideways momentum is seen on most of the major sectors except the IT sector, which is still in use. 0.6 to 2.5 kind of moves. Big moves happen, plus 2% moves happen, metal and reactive. Right? So except the IT stocks, Infinity, all the other major critic stock is the top 7 contributors to the Nifty. The top heavyweight stocks they're all in the sideways movement except the IT stocks. Fyers today was also buying surprisingly. Today also they're about 1,500 nearby. So there is a buy buying that has happened since 2 days. Although they have been sellers since long, so it's also positive. It's just cooled off finally. It was maintaining the 14 plus levels, and then today it is 13.62 and 10% of drop has happened finally. It's not cooling off at all, so finally it has happened. So these are the list of things that's in favor of the bulls. What's in favor of the bears? We have been repeating this. Nifty still has not closed above the 200 EMA, right? On the Banknifty has done that, it's still below the 200 EMA. We have 11 and 12.5% of correction has happened. Just 3 months and 4 red monthly candles are there. Red monthly candles has happened 4 times consecutively after so many years. It's happened only few times since the 33 years, if you take, right? 3 or 4 times basically. And most of the time, while it happened, it reverted with the green candle on the 5th month. So we'll have to, that gives hope for the bulls actually. But basically, we are in a major correction that was ongoing till a few days back, and heavy bearishness that was evident in in several factors like Bollinger Band swing, expansion downside, price still below 20 DMA, the median of the Bollinger Bands. Both in as Banknifty has managed to climb above that, but Nifty is still having so that's Bollinger Bands still bearish biased, you can say. Momentum trend both are negative still. all the momentum was picked up from the Banknifty. Um, this is a mistake actually. Uh, this is actually has to be taken off. Momentum, it's not a bearish factor. Momentum has climbed back, whether it will sustain or what we'll have to see. Momentum has climbed back in the sideways today. So if it does not fall back, but trouble is the trend does not change. In the short term, trend is still bearish, and the rising strength is there. That lower high pattern is still there. We have seen that in the short term charts, and using indices are still having selling pressure. It's very much clear. So it's trying to break out. It is trying to move to the place where it spent several weeks consolidating at the top of the descending wedge, and it fallen after that. Once again it is trying. So it's not having enough of selling pressure in the descending wedge across all the major indices of Drawdowns and Fyers and Nasdaq all. FI selling is still there. Just 2 days of buying the entire March, except for 1 or 2 days they were selling, and one of them was a Adani buy that caused the huge green on the FIs. But otherwise, across the March, across the entire last several years, FIs has been last couple of years, FIs has been selling, except in November. So last number. So FI selling is still a negative factor unless consistent buying comes in market a little more. Now the IT sector, that's a defensive sector and used to support most of the time, but IT is not in a weaker sector now. It's beaten down badly because of the banking crisis and all US recession fears and rate hikes and all these factors. IT got the most impacted. Most of the time the market corrects, IT supports the market and keeps it in steadiness. So that supportive thing is now turned as a most negative factor. Big corrections have happened across the mid cap, small cap, big cap, everywhere. Right? Infosys is trading at near 1,300 levels, and HCL is close to 1,000 now. So rupee is also, despite the fact rupee is weak and the dollar has benefited from it, rose up from its 82.34. Still, IT sector is falling. That's the negative part. Dollar gain should have benefited the IT sector. Instead, it's going the other way. So they're all negative factors. To summarize, so this was the last monthly expiry of the financial year, 22-23, and then it ended up with a wide red bullish candle. The markets gained some momentum after showing the weakness for several days. Up to almost 5 days, it has retained the 17K, 4 days or something. Yeah, and it was close almost above the last 10 days high or something. And Banknifty was strong. I had been telling that it was very supportive. It's much stronger always in comparison with the weak Nifty that is strong. So that has played out and that lifted up again today. Which is cold off as opposed selling. This all gives the bulls a hope that the rally can continue. At least post in the sideways consolidation mode for some time instead of cracking down and further correction to 15% or something. Right, so that's a hope the bulls have. But unfortunately, this momentum, the trend, they remain bearish and it takes some more time. Momentum just climbed the Banknifty, but anytime you can slip back. So just climbed on the sideways, but overall you can say that momentum has not improved that much. We'll have to wait one more day with the momentum steadies itself in the sideways, and trend is bearish for sure. And lower low pattern is what is dominating the charts. So global markets are also feeling the selling pressure. So levels to watch out is what we can do. Manage your risk, and levels, watch the levels of probability of resistance and support is only again. So 7250 and 7500 would be upside. Resistance zones 40,000, 41,000 on the Banknifty. Similarly, swing lows could be 16,650, 16,750. So correction there. Right. So those are the levels you got to watch, and that's it. Right. That's my view. The chart is still bearish, but good substantial momentum gains are there. Good hopes are there. There could be some consolidation. Bollinger Bands also saying that. That's what we had to work for. But overall, things have improved, but not enough. We'll have to wait for tomorrow also, or a couple of days more also. And until that 7250 is cleared, we cannot say that we have recovered or found a bottom. Even if 250 is cleared, it could go up to 17,500 and 7,500 and 17,800. It has to move above, only then we can say that we are out of the sideways bearishness. Until then, we may be sideways, we may fall back again. Right? So it's something to keep in mind. So always protect the capital, have hedge positions. Every dip can be purchased. Investment opportunities in SIP mode, and use option strategies for regular rental income and also for investments by using strategies like put, covered puts and all that things. Right? Check out the playlist on that. And if you're watching this and not subscribed, please subscribe and share to this. We have very few subscriptions and I appreciate your help as well. And if you subscribe, please like, comment if you like it, and comment if it gives feedback on what can be improved. And avail the Telegram services. Check out the description. Avail that. Right. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.